Alright, so this is going to be our class on entry and exit models. Entry and exit models. So this video, you will have to watch it a couple of times to really get the hang of it, but it's very simple. It's not different from all we've been doing. So I want to teach you how to enter a trade after you've marked up the zone where you are expecting price to react from. So basically, these are the time frames we work with, right? We
Yes.
start analyzing from the monthly, but we don't check the monthly every day, right? Because we just mark up key zones
Yes.
from there. Then we come to the weekly to see the key zones. Then the daily is our daily bread and butter, right? We want to know what the daily time frame is doing. Then from the daily, usually I jump to the 1 hour. I don't really check the 4 hours every day. It's not bad to check it, right? You can check it every day, but for me,
Okay.
based on experience, I just jump straight to the 1 hour. Then from the 1 hour time frame, I move to the 5 minutes time frame. So the 5 minutes time frame is my entry time frame.
Okay.
Yeah, that's where I enter a trade from. So there are two entry models I've taught you so far. I've taught you how to use candlestick patterns, and when you see the particular candlestick pattern, you know what to do, right?
Yes.
So like
Yes.
that
Yes.
example, the previous example the previous video we just watched, the one you did, when price broke your 1 hour structure, you say you saw a morning star, right? And that was your buy
Yes.
signal to take a buy. Yes, that is one entry signal. So upon the formation of those candlestick patterns at your key zones, you can take your shot. So usually what you do is that, just like you did, you make sure all the time frames aligned up until the 1 hour aligning. So the moment the 1 hour aligned with the direction you want market to go to, boom, upon the formation of the candlestick pattern, you take your shot. We'll talk about that much more later, but this will be the first entry model that I would like to talk about before we go back to revisit the candlestick patterns. Is that clear? Yeah.
Yes. Yes.
So we analyze from monthly for key zones, weekly key zones, daily. What are we looking at daily? Is it key zones alone or what?
Structure and decision.
Yeah, key zones and what? Structures. Key zones plus structures. This is what we are looking out for on that time frame, right?
Yes. Yes.
Then we do the same thing on all other time frames. We are marking up on 1 hour, the same thing, structures and key zones, right? We want to make
Yes.
sure that
Yes.
the 1 hour structure aligns. Then on the 5 minutes time frame, we are entering. But what are we entering on? We want the structure to align with that of the 1 hour. Let me show you how we do this. It's very simple. So let's use a currency first. See if there's anything happening in the market. Okay, so this is Euro USD. So let's use GU. I think I saw some nice ones. So this is GU monthly time frame. What can I see on the monthly time frame? We have this key zone here. Price has not come back into it yet. What other key zone do we have? I can see price reacting from something. I'll just use this. Price is reacting from something here. That's why we had this buy. Then finally we have this key zone here. So those are the key zones that I have in mind. But generally this trend is bearish. So if we pick our Fibonacci and draw from top to bottom, I've shown you how to use Fibonacci, Abby.
Yes. Yes.
Yeah. So because this is a bearish trend, where do I start drawing my Fibonacci from?
From the top.
From the top to the bottom, right? So I pick my Fibonacci, I draw it to the bottom. I want to see how far this retracement has happened. Price has retraced back to the 0.618 level. So price is
Okay.
it in premium or discount?
It's discount. No.
No,
Premium. No, sorry.
premium.
It's
Anything above
premium.
50% is premium. So price is in
Yeah. Yeah.
50% is in premium of this move. So
Mm.
naturally we were expecting that since price has come back to premium, it should sell. right? So
Mm.
this move, that
Yeah.
sell move should have continued, but instead it sold for some months, and now we are having this bullish move to the upside, which is quite weird. So
Okay.
since we are seeing a bullish move to the upside, we're going to focus on what is currently happening in the market. But basically on this time frame we are done. We've just marked out key zones and our job is over. So let's move to the weekly time frame for some clarity. On the weekly time frame, I can see new key zones. Remember, I'll focus on the most recent key zones. This is one of the most
Mm.
recent key zone here. Price is reacting from there. But if we look in the real sense, the weekly time frame is bearish because we had this, not entirely bearish, but we had this higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then boom, we had a break of structure here, right? Can you see
Yes.
it? We had a break of structure here. So as long as price have not traded above this high, there's still chances that it can drop, right?
Yes. Yes.
Yeah, but for now that has not happened. So my focus is just going to be marking up key zones where price is reacting from. So I can see that this is another key zone here on the weekly time frame. Where again can we mark? We can extend this key zone here. I can see that we have, that was the previous support, which can now act as a resistance, right?
Mm.
Do you get it?
Yes. Yes. Yes.
Yeah, so I've marked up key zones on this time frame too. So if price is able to break above where it is currently, what are we going to see? The retest, and where is our next area there? But if we begin to see sales on the lower time frames, means we are going to sell back to this point, right?
Yes. Yes.
Yeah, so now that we have our key zones marked up, straight to the daily time frame, let's study structure. So before now, the structure has been bullish. We've been seeing some higher highs and higher lows. So let's mark an old structure and try to spot out the key zones. So I'll mark this previous support turn, resistance turn support. Remember, it is also a mitigation block. Oops, but that mitigation block is too large because that's the last bullish candle, right? So I'll just mark the top of the
Yeah.
wick. I'll just focus on this. We also have an FVG that price came back to retest. This was the F. Let's use something else. This was the FVG, right? In the real
Yes.
sense,
Yes.
price came back to retest that FVG. Let's take this off. If this was the FVG, this was the move that came back to retest it, right? Because this
Yes.
one
Yes.
traded into the FVG. Yeah, it didn't trade to the 50% level, but the moment price has traded below into an FVG, that area has been mitigated.
Mm.
So in this case, let us focus on the FVG as our key zone. So now that we've marked this daily structure, where are we going to next? For me, it's always the 1 hour, right? So I
Yes.
move to
Yes.
the 1 hour, but let us do 4 hours just to see if there's anything we are missing. There's nothing much. The only thing we have here is that price formed the W pattern. This is a double bottom, right? If you want more
Yes.
clarity, you
Yes.
could just put this here if you want. Yeah, just put that there. So form the W pattern and a pin bar. Upon this pin bar, you could have bought, but the stop loss will be too wide because your stop loss will have to be here. So for that reason, I'll go to the 1 hour time frame. Let's see if there's anything for us. Is there anything for the boys? Yeah, so looking at this 1 hour structure, I can see that we had some structures that formed here. Lower high, lower low, lower high, lower low. Right? Can you see that structure?
Yes. Yes.
Yeah. So what I'll just be patiently waiting for is for price to break these structures that are forming. So the moment we broke this high, we have a high here. Upon the retest, we can actually start looking for a buy. But if you look carefully, there's something called field swing. I believe I've taught you field swing. When price is bearish in this case and it fails to break below the old low, that's a field swing. Or price was bullish, then it fails to break above this old high. This point here is called the field swing. Do you get it?
Yes. Yes.
So to get see this structure better, it's not as clear as I want it to be on the 1 hour. I can go back to the 30 minutes.
Okay.
Yeah, I just want to see it clearer. Now you can see the structural points much more clearly, right?
Yes. Yes.
So here on the, what time is it? This is 7:30 a.m. So now I'm going to be adding time to the trading listing. So usually I change my trading view to GMT to Lagos timing. This is where to do it from. Just click here time zone. is set on Lagos plus 1. So I usually put a horizontal line at 8 o'clock in the morning.
Okay.
I just put one at 8 o'clock. Yeah. Then I put another horizontal line at 1:30 p.m.
Okay.
You get? Those are the times I look for a trade. So I'll teach you that later though. So now I put my horizontal line, no 8 o'clock. Why 8 o'clock? That's the opening of London session. So I want to study this structure. This structure is bearish, right? Price has traded into
Yes.
my key zone. Now that price has traded into my key zone, if market wants to go up, I want to see it start breaking this previous bearish structure. Did that happen? Yes, we had a break of structure here. Let's mark our boss. That's a break of structure, right?
Yes.
Yeah, so upon this break of structure, I want to see if there is any PDRA that price can come back for. We have multiple. We had this mitigation block here, and we also had this fair value gap here, right? So I'll focus on the fair value gap in this case. Let me change the color to red so it will be easy for us to find it later. Yeah, that my right, the red is light sharp. Yeah, so we have that fair value gap. Now that price has traded back into our fair value gap. um there are two things you can do. You can use the candlestick pattern to take this trade. So boom, price tapped it the first time, had this engulfing pattern. So even if you had bought from this point, you would have had your buy here, your stop loss below this 30-minute structure, right?
Mm.
Then you can be targeting this major high as your TP. That's about 1 ratio 3 point something. But look at what happened. Price came back to take you out at a loss before going up. Can you see it?
Yes.
Yeah, so that's one issue you can have when you're trading candlestick pattern, especially trading on the higher like entering on higher time frames like 30 minutes, 15 minutes, and so 30 minutes especially. 30 minutes, 1 hour, your stop loss needs to be very wide. So usually when I'm using the 30 minutes for my entry or 1 hour, I use 4 hours lows as my structural point. But in this case, this 4 hour low is too much now. Just imagine, this risk to reward is terrible. We can't take this trade, right? This
Yes.
trade is terrible, yeah. So in the real sense, that's where we would have kept our stop loss and would have been hit the moment price traded back here. So that would have lost that trade. So in order not to lose it, right? That's why I have this other 5 minutes entry model that I'm teaching you now. So
Okay.
what have I been doing? I've just been marking up key zones and watching for break of structures, right? So now that we've
Yes.
broken this 30-minute structure, I usually do this on the 1 hour, but why I moved down to the 30 minutes is because the 1 hour was not really clear and I needed a clearer picture. So I moved to 30 minutes, not 15, take note, 30 minutes. So I mark this PDRA where price has broken structure. So I mark the PDRA waiting for price to retest it. So usually for me, I like to see price move within the time of 8 a.m. to 11 a.m. Anything after that, I'm not very interested, right? But in this case, price did not really move at that time. It just consolidated, then came to New York session. It was New York session we had the move. So let's go to the 5 minutes time frame to look for an entry. I hope I can find that chart. Yeah, we have it. Remember that this first line, what does it signify? 8 a.m. in the morning. This second line is 1:30, and that 1:30 is what time? New York session, right?
Yes. Yes.
Yeah, so in London session, when price came back to retest our zone, we would have taken a loss. Why did we take a loss? Let's see. Okay, there was not really a clear structure here. Well, we would have taken a loss in the real sense, because this is why we would have taken that loss. So what I'm doing on the 5 minutes time frame is no different from what I've been doing on the other time frames. I just want to see price break a 5 minute structure. Then upon the retest, I enter and take the trade.
Mm.
Do you get it?
Yes. Yes.
So the same way we've been waiting for break of structures on the other time frames, when I mark my 1 hour PDRA, I go back to the 5 minutes time frame to see price come back to that 1 hour PDRA, break it, then upon the retest we take the short. So it's the same thing like marking from the daily, come to the 1 hour time frame, wait for the 1 hour break of structure, then upon the retest you take your short. But in this case I'm going back to a much more lower time frame. Is it clear?
Yes.
Yeah. So this is why it would have been a loss. So yeah, we had this 1 hour slash 30 minutes break of structure, right? Remember it, we marked it, and we marked this PDRE. Price traded back into our PDRE, and we had this move, then boom, we had this break of structure here, right? So upon this break of structure, I would have actually entered a buy. What time was that? That was 11. Okay, this break of structure happened at 11. I wouldn't have taken the trade. You see why timing helps us? So I would have taken a buy, put my stop loss here, and let's target 1 to 2. That would have been my target on that trade. Something like this. You can see that boom, market came back to take me out at a loss. Do you see it? Timing is very
Yes.
important. That break happened at a wrong time for me. This was 11:50. 11:50. I tried not to take trades until 1:30 again. I always like to take my trades within the hour of 8 a.m. to 10. Sometimes I do 11, but anything past 11 is a bit skeptical for me. I'm a bit skeptical taking that trade. So yeah, I wouldn't have taken that loss because I won't be taking the trade. So coming down to New York session, because clearly in London session we didn't have a trade, but price is still in our PDRA, right? The only time this
Yes.
market will be invalidated is when we break this 1 hour low, right? Where is our 1 hour low? This is our 1 hour low here, right or wrong?
Yeah. Right. Right.
Exactly, that's the only time this setup will be invalidated. But as long as price does not trade below that structural point, we are still good. So now I want to study what is happening on the in the New York session. So in the New York session, I'm waiting for price to just break this high. We broke the high, but there was no trade. We broke above. So what do we want to see? Boom, retest. Upon the retest, we take our trade to the upside. But look at when the retest happened. The market pushed up very much, then came to retest by 5 p.m. 16 o'clock is what? 4 abi? So this is 3 p.m. It came to retest by 3 p.m. But this whole move was too wide for me. So pick your Fibonacci, mark from that low to that high. No, not Fibonacci. Measure. You're measuring to. I want to mark from 59 pips. That was that whole move. So it was too much. This move was too much. If I enter that trade, the trade was not looking, this whole move was too much. I want a short break, break something small and come and retest it sharp sharp. You get? That break was too
Yes. Yes.
much. Let me show you something what I'm talking about. You see this kind of break retest, very short. It's not so wide. That's what I want. For this whole move to the upside, I think there was news on that day, 16th November. I think there was news or something for the way the market pumped. So yes, there was a buy, because if you mark the whole of this zone, this is now the new resistance, right? Yes, resistance turn support, right? Price came back there,
Yes.
and if you want to add a candlestick pattern to it, there was a clear candlestick pattern. We had a pin bar from there, right? So upon the formation of this pin bar, what do? You can take a buy, stop loss where? Here, right? So usually me, I use limit entry orders for this kind of orders, but usually for now, just if you come to the five, if it comes to your 5 minutes PDRE, once you see a candlestick pattern, take the trade. But this trade was not trading for me. You can see it didn't go. It was a failed trade. Would have still taken another loss. So on that particular day, all our setups did not play out. They did not play out. We wouldn't have taken the New York session, the London session trade, and we wouldn't have taken this New York session trade because this whole swing was too much, 50 something pips. It's telling me to just stay out of the market. This market will not move after this move, this kind of massive move. Do you get it?
Yeah.
Yeah, so let's go back to another. Let's look for another trade. That day is gone. Okay, back to the daily time frame, weekly time frame. There's nothing to do here. Let's go to the daily and focus on the current trend. So the current trend of this market is still bullish. So I want to keep looking for bullish markets. Where do we have our next break of structure? Here, this was a break of structure, right? So we can call that boss, Abby.
Yeah. Yeah.
So there are two things we can mark here. We have this resistance turn support, but instead of marking it, I can see some other better PDRs. I can see there's a fair value gap here. I don't know if it's clear to you. Let me make it wide. From this previous candle, from here to here, you can see the gap, right?
Yes. Yes.
Yeah, so there's a fair value gap. I've marked it up. So now that we've marked our fair value gap, let's go to the 1 hour time frame to go and see how the market is looking. I'm back to the 1 hour time frame. Remember, this is the fair value gap. You can see my tools clearly, right? I know the
Yes. I
colors are
can.
light. Yeah. So price has come back into our 1 hour zone. What do we have? Do we really have a trade? Price boom. So this was where the break of structure happened, right? Remember that you want to see the 1 hour time frame break structure to align with your current trend, right? So that was where the 1 hour time frame broke structure. But even at that, the whole thing still looks funny. We had a break of structure. What the price trade back into? That was the end of the day. That day ended. But even at that, I can't see any better structural point that I can pin to. So I'll just mark the whole of that mitigation block. I'll just mark the whole of that mitigation block. Why am I marking two candlesticks as this mitigation block? Why did I mark the two?
Okay.
Bro,
This
just carry up with
this
it.
one, this is what's it called? Anodium star.
No, I'm not talking about the candlestick patterns. The candlestick pattern does not
Okay.
matter to me. Why did I mark
Okay.
two
Okay.
candlesticks as my PDRA?
Okay. Okay. In order to be sure,
No,
like
I
because
said
of
when.
this is not that healthy.
Yes, I said whenever
I
you
mean
you.
the one
Okay, go on. I can
the
hear you.
other
Go
block.
on.
I said the that indication card is not healthy. You have to
Exactly.
mark. You have to mark from
Exactly. That's it. It's not healthy. So I marked the both of them. That's the only PDRA I can see there. But look, I have my period separator. You can see that this was the end of that day. This small dots on the chart. It has shown me that that's the end of that day. You can bring your cursor. You can see this 2200. That's 10 p.m. in the night. So there was no trade on that day, but we had a break of structure from our PDRA. So it's telling us that the next day we are going to see some buy opportunities, right? Because the 1 hour time frame has shifted. So now that price is currently in our 1 hour PDRA, the first thing I'll do is pick my horizontal line in the new day, mark 8 a.m. Then put another one at 1:30. Go to 30 minutes time frame. Yeah, but now that I've marked it, what time frame am I going to? 5 minutes time frame because I'm looking for entries. So on my 5 minutes time frame, what do I see in the opening of the new day? Okay, we had a trade, not the best. The range is still wide. What kind of wide range are this? But we can't still miss the trade. What time is this? 10:45. Okay. So at 8 a.m., there's something I'll still teach you about taking out the previous lows. I'll teach you that later. But at the opening of market at 8 a.m., we had a nice break of structure. In this case, price broke multiple structures. So I'll just mark the most recent one, the highest one. Why is it multiple structures? We broke here, We broke
the other
here,
one. Yeah.
we broke
Yeah.
here, and we broke that top. So I'll just focus on the most recent one. So that most recent one, usually when price breaks multiple structures like this, right? Focus on the most recent one. Don't come and be marking this one here and be waiting for price to come there. Do you get?
Okay.
Or
Okay.
marking this second one, waiting for price to get there. Price can come there, but that's focus on the most recent. There's even double confirmation here. And see. So what did you see? Price came back to retest this most recent structure. So I'll use my Fibonacci to mark this whole zone if price can trade into, yeah. So this zone where price came to is the 50% level. So that's a good zone to be looking for a buy from. So if in my case, this is what I would have done. Upon the break of this structure, right? Let me first see what's the range. Is it a trade that is worth taking? 39 pips. Okay, so from here, yeah. So this is what I would have done, right? For my entry, I would have just placed a limit order, a buy limit here. Just a little, not directly on the, I'll take it above my 50% of the Fibonacci. Do you get? In case the Fibonacci may not align always, I'm going to not put it directly on the zone I marked. It's going to be above the zone because I'm giving room for spread. Do you get? So a little bit above the zone like this, but where my stop loss be below this old low, just a little bit below it. Then my target is going to be 2 times what I'm risking. You can see, I can see my risk to reward ratio ticking here, right?
Mm.
Yeah, so that's going to be my first profit target, 2 times what I'm risking, 1:2. Can I look for more? Is there any structural point I can pin this trade to? I don't have any old structural points, so in that case I'll just take 1 to 2 and I'm good to go, no greed. Now your Fibonacci is set as my own, right? So in this kind of case, if 1 to 2 is good, is a good enough trade, or you can decide to do this -1. That's one standard deviation. You can decide to do one standard deviation, or do 1.5 standard deviation, but one standard deviation is good. Yeah, one standard deviation is good for this trade. Did you get it? One
Mm.
standard deviation is 1:2.33. That's a very good trade. So what do? We place an order there, stop loss below there. Or in case you don't want to place an order, what's the next way you can enter? I said wait for a candlestick pattern to form from the key zone, right? Do we have a valid
Mm.
candlestick pattern here? Yes. One price tapped this zone. We had a morning star, red indecision bullish morning star. If you didn't enter, see another pin bar. If you didn't enter, see an engulfing pattern. This goes. So if you didn't enter here, enter here. If you didn't enter here, stop loss below this low, and you target 1:2. Or if you use your Fibonacci to draw from the whole range of that swing, you can trade to one standard deviation if one standard deviation is up to 1:2. If it is not up to 1:2, don't trade. You can do 2 standard deviation. If 2 standard deviation is not up to 1:2, you can now do 3 standard deviation. Or at the same time, take note of your your structural points. Let's assume that there is a high here, right? I'll also take note of that high. That is where my stop loss will stop. I won't, even if it's one standard deviation, I'll know I'll take it like that. But usually you are looking for trades that will give you 1:2 minimum. Do you get it?
Mm.
Is it clear? Is it making sense? So when was this?
Yes,
This
it is.
was 24th November. This was a very clean trade. Now let us check the time this happened. 10:40 a.m. It was still within our trading period. So boom, we could have taken that trade. Then we'll have to hold the trade all through New York session. We hold it through London, through New York session, and finally we had. I would have just been doing 1:2. It would still be that same New York session. So one standard deviation. Yeah, and that was our winning trade. Is it clear? Does it make sense?
Mm. Yes. Yes.
Yeah. So this is my entry model. It's very simple, right?
Mm.
Is it? You're not saying anything. No?
Mm. Yes, yes, yes. I'm getting it.
Alright, so this is what I want you to do now. I want you to watch these videos as many times as you can. and try to replicate what I've done. This is where you need a lot of back testing. You can see that I use old data, not necessarily what is happening currently in the market. So you can mark up, you start from a higher time frame, pick a zone, mark, then you keep going to check those zones on the lower time frames to see if this entry model plays out in it. Any question?
No, no, not for now. When I'm done watching and when I've watched, I will,
All right.
I will ask
So
again.
okay, so one last one. So same GBP USD. So this last swing, I was expecting price to come back to this zone. I was expecting price to come back here before the next push to the upside. You can't see it really clearly until you go to the 4 hours time frame in this case. So we can see on the 4 hours time frame, this is how it looks. This trade was a bit technical, sure, but I had this zone marked up at the zone where I was looking at. But in my mind, I wanted price to come to this lower one. But price started reacting from here. I took this buy on Friday. Now let me show you how the buy played out. So on the 4 from the 4 hours, I'll go to the 1 hour to see if there's any structure. So in this case, right, I traded from the 4 hours straight to the 5 minutes. I even used the candlestick pattern from the 1 hour direct to take the trade. Actually, I didn't really go to the 5 minutes. But let's look at how it played out. So this is what I did on that day. I saw that price had come back into the previous key zone and it was finding it hard to break. So upon this engulfing pattern, that was late in the evening, at 4 p.m. I took a buy, stop loss here, and we had this buy to the upside. That was what I took that day. That's a very different entry model. But let's just mark up this key zone and see if we will find our entry model on it. So I can't see a clear break of structure, sha. Still yet no clear break of structure. But if I go to the 5 minutes time frame, I can see a very nice entry that occurred following our entry model. You can see that the 5 minutes time frame market was bearish, right? Then where did we
Yeah,
break structure? Market broke here, right? Where am I going to mark? I can see a fair value gap somewhere here, but always remember to mark the mitigation block first. That's the most important too. You see it aligns with that fair value gap, so we can just take one out. So what do we do? The moment price tapped into it, this was the first tap. We had this very massive candle. You would have actually bought there. It's not a bad idea. If you had bought here, stop loss here is not bad. Or you would have bought on this second touch, this pin bar. That's the pin bar you would have bought. You see you have a tighter stop loss. But last I don't think, even if you bought here, the stop loss is not too wide. It's just about 33 pips, but this one is much more tighter. So that's why I like to use limit orders for this one. So usually I'll just place my limit order somewhere here. That's where my limit order would have been. Stop loss here, boom, it picked me. But for now, I'll be doing candlestick patterns until you get good at it. So what would I have done if I took the trade from here? I would have still picked my Fibonacci and marked this whole range. This was the whole range. Then I would see the 50% level. You see that I put my trade above the 50% level. Yeah, then what will I be targeting? Let me first target one standard deviation. One standard deviation is up to 1:2. So that's where I would have TP'd. And you see that that one standard deviation aligns. Okay, where's my last major structure? Oh, okay, I have a major structure here. So that could be a long trade. We have a major structure there. So I could target more. I could target up to 2 standard deviation on this trade. You see, that was it. I would have held the trade till the close of the day, then take my profit. And that was like 1:3.58. That's a very good trade. Very good trade. Because that's our major structural point. I would have been targeting that point. But because it was Friday, upon the close of the day, I would have taken my profit. That was a very good trade. So do you see how I used the 5 minutes time frame to look for an entry? Is it clear?
yes, yes, yes.
Yeah. Now this last entry I just did is not exactly like the previous one in the case of I didn't see 1 hour break of structure, right? So please All I was just trying to point out from here is how the 5 minute structure broke and we entered. But you want to see that 1 hour shift in market structure or the 30 minute shift in market structure before you go to the um what is it called, 5 minutes to look for an
So,
entry.
5 minutes.
Yeah, so as you get better, sometimes I use directly from the 4 hours break of structure, I move straight to the 5 minutes to look for an entry. We'll do that much more later, but for now, just get used to what we have in this video. So that's going to be it from my end for today. Please watch these videos, and if you have questions, I'm always available to answer. So no questions for now, right?
No, no, no. You said you drop the videos on Monday.
Sure, sure.
Oh, okay. That's
All
about
right
today.
then. Yeah. So have a good evening.
All right, sir. Thank you.
Bye.